Good morning, everyone, and thank you for joining me today. Today, we're going to address some of the tax changes that has occurred since the holidays. Now, remember, I'm just going to give you a little tidbit about the change. Please do your due diligence and look at the law itself, and to get because everything comes with some with specific requirements. So please take a look at that. So, what has passed on December 20th, the president signed into act the Secure Act. And so that act includes some changes in retirement plans as well as some notes on the extenders. So the following extenders have been passed. Retroactive reinstatement for the mortgage insurance premium deduction has been extended through 2020. Retroactive reinstatement for the exclusion of the qualified mortgage debt has been extended through 2020. Retroactive reinstatement of the above the line qualified tuitions and related expenses deduction has been extended through 2020. Also, the construction for energy efficient homes has been extended through 2020. Also, in addition, the medical expense deduction on returns is going to be 7.5% for 2019 and 2020, as well as the employer credit for paid family and medical leave. And the Work Opportunity Act credit has been reinstated for 2020. Now, also, we have three Affordable Care Act provisions that were appealed. The 2.3 excise tax on medical devices will be repealed, stating on January 1st, 2020. The excise tax on high cost employer sponsored health plans will be repealed starting January 1st, 2020. This is also known as the Cadillac tax. And then the excise tax on health insurance providers, also known as the health insurance tax, will be repealed starting January 1st, 2021. Now, as I stated on that Secure Act that was passed on December 20th and signed by the president, there was also issues of concerning the retirement plans. And I'm just going to name a couple. So the first one, starting 2020, the age required minimum distribution is 72. Now, there again, there's a caveat there that you must turn 70 and a half after December 31st of 2019. So just remember that. Also, which is a kind of exciting one, that in 2020, new parents can take a penalty free distribution from their retirement plans for up to 1 year after the birth or adoption of their child. Now, remember, that's only the penalty is free. You still have to pay the tax on it. Now, like I said, this is just a snippet of what the Secure Act included. Now, we have one more opportunity for you to learn more about this and the other items that are happening up on the Hill, and that will be on January 14th. We will be doing a seminar in Gaithersburg with Gear Up, and that is going to be an all day event, 8 hours. So, if you have the opportunity and you would like to learn more about this, please join us on the 14th. And just a little side note, that even though QBI changed last year, there's a lot of things that happen that really don't come effect until this year. So if you need a little update on the QBI issue as well, I would take advantage and stop by and see us on the 14th and sign up for that seminar. Now, also on the mileage rates, 2020, the new rates are as follows. The business rate is going to be 57.5 cents per mile. Medical and moving is going to be 17 cents per mile, and charitable services is 14 cents per mile. Now, again, they change that every year. But one thing they did do different this year, IRS released Revenue Procedure 2019-46. Now, this is a very important little revenue procedure that I think everyone should take a moment and read. This updates on the rules of using the optional standard deduction rates and the computation of the cost for operating the automobile. And this is for business, charity, medical, as well as moving. So I would highly recommend that you take a look at this and read it over before you begin your tax season. I think you could find some interesting reading there. Now, also in addition, the verification code. Now, if you all remember on your W-2, you had that huge long number, which was a verification code. And the whole point was to protect for fraud and for stealing identity. Well, due to the introduction of the new wage and income reporting requirements, the IRS has discontinued that from the Form W-2. And this again was just a pilot in 2019. So just remember that. So remember, all W-2s and 1099s are due on January 31st of this every year. And hopefully the IRS moved those, well, W-2s were always on the 31st, moved that to help combat the fraud and identity theft. So just keep a note of that in the back of your mind. Now, remember also the new version of the W-4 is ready and must be used for all new employees or current employees who are going to be making change to their withholding. So, if you have an employee who's been around for a while and is not making any change, they do not need to go and have everyone do a new W-4. However, if they want to change their withholding, they have to do the new W-4. So, that's important. So, I would definitely take a look at that. Now, for those of you, we did have a seminar on this and also a webinar on the payroll, and we have a nice book that we're selling that we have a few copies left from that seminar. So, if you'd like to get some information about the W-4 and the changes, you can call the office at 1-800 922 9672, and we'll be able to sell you that manual from the seminar for $25 plus shipping. So if you're interested in that, just give the office a call. And I'll tell you, I was in a meeting the last 2 days. I've been in some meetings, and both conversations sort of went towards the W-4 because people are starting to do those now, and how different it is. So, you might want to take a look at that or consider purchasing that book. Now, turning regulation going to requirements. So, for our enrolled agent members, the enrollment renewal application for EAs whose Social Security number ends in 4, 5, or 6 is now open through January 31st, 2020. Now, if you do not renew your EA status, it will automatically expire on March 31st, 2020. Now, you don't want your status to be revoked in the middle of tax season. So remember, make sure you have all your CPE requirements and that you've met and everything, and you make that renewal because that is important. Now, the cost of the renewal is $67. Now, if you recall, that prices were changed when you used to have to pay for the P10, but now that the P10 is free, you do have the cost of $67. Now, yesterday, I believe it was yesterday or even the day before, the IRS announced that on January 27th, they will begin accepting individual or business tax returns. And I think the business tax returns actually they're going to start accepting on January 9th, I recall. So for all those who are like to get their done early, and I know we all have clients that do that, you all knows who they are. They are immediately knocking at your doors as soon as they get their W-2. Again, the IRS will start accepting on January 27th. Also, just a little reminder that all the returns are due on April 15th. I think we all know that date. But here's a little note. So the partnerships are going to be due March 16th instead of the 15th this year because March 15th lands on a Sunday. So you got one little extra day, but just not a lot of time, but at least 24 hours to get that done. Now, before you begin your tax season, we'd like to see you and have network and have a little special social time with you. So again, this year we're hosting our pre-tax season wine and cheese kickoff on January 15th, which is next Wednesday. And it'll be here in our Columbia location. It's from 5 to 7 p.m. Now, everyone is invited to attend, and we'd love to see you. We just ask that you RSVP to us at 1-800 922 9672. Remember, as an added benefit and as a thank you, and as you begin your tax season, we will be providing free shredding for you. Now, the shredding begins at 5:30. So please stop on by, bring your shredding. We'd love to see you. And hey, come by and say hi. And we always enjoy your company. So with that, I think that brings you up to speed on everything. Again, I want to thank everyone for joining me this morning. And I want everyone to have a wonderful weekend. And don't forget, the very important thing is tomorrow, we're all going to be rooting for the Ravens to a big win. To a big win. Boy, if I could say that. There you go. So without further ado, thank you again and see you next week.